In this video, we begin covering overhead costs for the Chapter 15 job order costing material. This is video 3 of 4 for those class notes for Chapter 15. We're beginning at the top of page 6 and we will go through page 12. This entire video will cover overhead, accounting for actual overhead costs, estimated or applied overhead, and then closing overhead. So, the overhead process. So overhead, kind of by their very nature, cannot be efficiently traced back to a specific job. So we estimate overhead costs for individual jobs instead. This process involves our estimation of total overhead costs at the beginning of the period, or before the period, and our estimate of some basis that we'll use to apply it with. So we calculate some estimated overhead rate. We use that rate to apply it to actual jobs, or to apply it to jobs, to apply this estimate to jobs. Then we record actual overhead items, which are comprised of indirect materials, indirect labor, and other overhead costs. And then at the end, we close the overhead account. Basically, we want the overhead account to equal to 0 at the end, and we always balance that closing entry with cost of goods sold. So it will always involve overhead and cost of goods sold in some order. We do whatever is necessary, though, to bring the overhead account down to 0. When I apply overhead, that always is when I credit the overhead account for the estimate, and then I debit the overhead account for the actual overhead cost. So at the end, the difference between that estimate and these actual costs is the balance in the overhead account, and I close it to eliminate that error, the error in my estimate. Okay, we're going to do this, do a big example where this is more detailed out. So first, we need to get an estimated rate, estimated overhead rate, or predetermined overhead rate. So you need to know this calculation. To get your rate, you always take your estimate of overhead cost over your estimate of basis. Then we use this rate that we get from this calculation to apply it to overhead, to actual jobs based on the actual usage of that basis. Normally that basis or that activity base will be some measure of production. We see direct labor hours, machine hours, those things really commonly. Ideally, it should be related to overhead costs, but you're never really going to have to pick a basis. You'll always be given your basis in this class. But direct labor hours, machine hours are pretty common. We're going to see direct labor dollars or direct labor cost in a few of these, and that's also okay. That basis, that activity basis, can be whatever works for the company. So here's an example of computing that estimated rate. Road Warriors uses direct labor cost as its basis. So my basis is dollars of direct labor. That's what I use to apply overhead. For this period, I estimate direct labor cost of $125 and I estimate overhead of $200,000. Your estimated overhead rate is always going to be estimated overhead cost over estimated basis. So how many dollars in overhead do I think per unit of basis? So here, I'm always looking for two estimates. I've got my estimated overhead cost, that comes out to be so overhead cost will be 1.6 times direct labor cost, or you could say overhead costs are 160% of direct labor cost. Either way, those are my answers. Then I want to apply it. So that's my rate. I use that rate, my estimated rate, times the actual basis for the job or for whatever you're trying to apply it to. So here, Road Warrior uses direct labor hours as, we're going to say direct labor cost as their basis. They've assessed that it will be 1.6 times direct labor cost. So my total direct labor cost was $4,200. What will overhead be? So I take my rate, $1.6, and I multiply by the actual, in this case, direct labor cost, which were $4,200. So 1.6 times 4,200 $6,720. Alternatively, I could apply it to each individual job separately. So the cost for that job times the 1.6 estimated overhead rate, 1,000 times 1.6, 2,000 times 1.6, 1,200 times 1.6, add those all up together, $6,720. You'll note that that's the same thing I got up here when I just applied it to the total of direct labor cost. So to apply overhead or to estimate overhead here, that estimate of overhead is added to work in process, which also means I added to the job cost sheet too. So I add that estimate of overhead to work in process. So I debit work in process for the estimated amount of $6,720. And then I add that overhead estimate to the overhead account. That's the one time I credit the overhead account. Okay, so what do I have in work in process after that journal entry? Remember, I began with 0. I've already added these before. I've already put those in my T account from before. Now I've got this line for work in process, a debit of $67.20. $67.20 plus $1,800 plus $4,200, $12,720 in debits. I've got nothing in credits, so a balance of $12,720 debit balance in work in process. So I could check that by also looking at my job cost sheets. I'm going to add 1600, B15, I had 1600. Or 1.6 times 1,000. 1.6 times 2,000, that was the 3,200. B16, and then B17, 19, 20. So my total for each of these jobs, 700 plus 1,000, 1,700 plus 1,600, 3,300. 300 plus 1,200 is 1,500 plus 1920, 3,420. 800 plus 2,000 is 2,800 plus 3,200, 6,000. So altogether, those job cost sheets total up to be 6,000 plus 3,300 plus the last one, which was 3,420. 12,720. Those should equal the work in process balance, which is 12,720. So that works out, that checks out. Job cost sheets and work in process balance should always equal. Or active job cost sheets and work in process balance should equal. Now, that was when I have estimated or applied overhead. I credit overhead, I add to work in process by debiting work in process. With actual overhead costs, I do not put those on the job cost sheets. They do not go in work in process. Only the estimate goes in work in process or goes to the job cost sheets. Any actual overhead cost, I just take from that estimate. I do that by debiting overhead. I've got three types: indirect materials, indirect labor, and other. I credit raw materials for the material one, credit cash or wages payable typically for indirect labor. What I debit or credit for the other overhead kind of depends on the context. You just go line by line on those. Regardless though, I debit overhead. So same debit regardless of which one I'm on, materials, labor, or other. What I credit differs, but what I debit is the same. So recording indirect materials, which we said are an actual overhead cost. So during March, Road Warriors had $550 of actual indirect materials cost. That's an actual overhead item. An actual overhead item requires me to debit overhead in the amount of $550. I used my raw materials here, so I'm decreasing raw materials with a credit. I'm decreasing them because I use them. I have less of them. So I decrease that asset account with a credit. So what is my updated balance of raw materials after that journal entry? So I've got it present, I've got it current up until this last journal entry. When I use the indirect materials, we're looking for raw materials. I've got a credit of $550. So at this point, $1,027.50, I've got $3,750 in debits, $1,800 plus $550, I've got $2,350 in credits. So I've got more in debits than I do in credits. $3,750 debit minus $2,350 in credits. I'm going to have a debit balance of $1,400. That's how much I have in raw materials left. Indirect labor. So during March, they incur $1,100 of actual indirect labor costs. That's also an actual overhead cost. Any actual overhead cost requires a debit to overhead and in this case, let's assume that I've not yet paid, that I owe these wages. That's an increase in how much I owe in wages, so an increase in wages payable, a liability account, I credit. I owe more in wages than I did before. Now, other overhead costs. I've done indirect materials, indirect labor. Now these are the other overhead costs. Like other overhead costs, they are not other actual overhead costs. They're not recorded in work in process and do not go to the job cost sheets. I only do that with estimated overhead. Instead, just like with the others, I debit overhead for whatever the total other overhead costs are, $2,400 plus $1,620 plus $250 plus $1,000, $5,270. And then I will credit. I ask myself what to credit for each of these. That is the biggest concern or the most difficult thing here. So we've got depreciation on factory equipment. That is indeed an other overhead cost. Typically, what would I credit if I was recording depreciation? I would credit accumulated depreciation, and so I do here. Rent, I've incurred it but not yet paid it, so I have to pay it later. That's an increase in a payable. We'll just call this rent payable. I owe more in rent, so I would credit that to increase the liability. Utilities, incurred, not yet paid, so I owe for those utilities. It's an increase in the liability. Let's just say increase in accounts payable, so I credit accounts payable. Then I've got insurance. It had been prepaid, but I've used it in this period. So if I were recording the use of prepaid insurance an asset, if I've used it, I've decreased the amount that's prepaid. So I've decreased that asset, which would require a credit to the prepaid insurance. So I'm crediting accumulated depreciation of $2,400. Crediting rent payable of $1,620. Crediting accounts payable of $250. And then crediting prepaid insurance of $1,000. The journal entry should be in balance now. Let's check. I've got 52.70 in debits. $2,400 plus $1,620 plus $250 plus $1,000 in credits, $52.70. They are indeed in balance, so that confirms that journal entry. I debit the overhead still to record the total actual overhead cost, and this is the other overhead journal entry. Or we could say the actual and then other overhead. So I should have 3 actual overhead journal entries in like the simple way that we do it in this class. One for indirect materials, indirect labor, and one for other overhead. And then I should have 1 applied overhead journal entry, which would credit overhead. So what do I have in the balance of the factory overhead account after that journal entry? So I began with 0. I will always begin with 0 because it's always closed before the end of the period. So it will always begin anew with 0. So on page 7, I'm going to highlight these in this blue color. Add a credit to overhead of $67.20. And page 8, indirect materials, right here, a debit of $550. Page 8, indirect labor, debit to overhead of $1,100. And then here, on page 9, directly above, debit to overhead of $52.70 for actual overhead other. So now let's see what my balance is. $550 plus $1,100 plus $52.70 in debits. $69.20 in debits versus $67.20 in credits. So $69.20 debit minus $67.20 in credits. I've got more in debits than I do in credits. $69.20 minus $67.20, $200 debit balance. So remember that actual are debited and estimated or applied are credited. So if I've got more in debits at $69.20 than I do in credits at $67, I've got more actual than applied. So I did not apply enough. I should have had 69, I only have 67. So I applied too little. I under applied. So I need to close. This right here, this balance represents the error in my estimate. There should always basically be before closing. There should be 4 journal entry lines. 1 for the estimate, which will be credited, and then 3 for the actual, which will be debited. The balance represents the error. So I've got this $200 debit balance. I want to get rid of it. I want to close. To close it means I want to get a $0 balance at the end. So I need to get completely rid of that $200 debit balance and overhead. We said I underapplied. So I have that debit balance remaining. I didn't charge enough overhead. So there was too little overhead in inventory via what I put in work in process. So there's not enough that goes to cost of goods sold. So I need to remove that debit balance by crediting overhead. But then, because there's not enough in cost of goods sold, I need to debit cost of goods sold to go ahead and expense that error, to add that extra error to increase cost of goods sold expense. That increases the expense account by the amount that I was off. So you'll always see when I fix either under or over applied overhead, there'll always be only 2 accounts involved: overhead, cost of goods sold. Which one's debited, which one's credited, depends on whether or not you under or over applied overhead. So the easiest way to do this is to first figure out what you need to do to get rid of the overhead balance, and then just balance that journal entry via doing something to cost of goods sold. So I applied 6720, applied as estimated, so I credited that 6720. Actual overhead costs I would have debited. So the 6920 debit minus the 6720 credit. I've got more in debit. 69 minus 67. I have a $200 debit balance. That's what I have in the balance. I need to get rid of that. So I do the opposite to the overhead account. To get rid of a $200 debit, I need to credit overhead by 200. And then I want to balance that journal entry via cost of goods sold. I've got a credit to overhead. I need a debit. And I will debit cost of goods sold for the 200. So here is my T account right before the closing entry. I'm looking at overhead. So right here, I'm recording a credit to overhead of 200. So 550, 1100, 5270, 6920 in debits, 6720 plus 200, 6920 in credits. So I've got the same amount in debits and credits. 6920 debit minus 6920 credit is just going to give me a $0 balance, which is exactly what I want when I close the account. It should have a $0 balance. So if I over apply, which means actual, which are debited, is less than the estimated or applied, which are credited, then I've got more in credits than I do in debits. I've got a credit balance. I would have applied too much overhead, so there would have been too much in cost of goods sold, so I would want to reduce that. Cost of goods sold is an expense account, so to reduce it, I would need to credit. Additionally, I've got a credit balance, so I want to remove with a debit to overhead to zero it out. So let's do this example. A manufacturer applied $300,000, So that 300,000, that estimate would be credited. And then I've got actual overhead cost of 305. So this actual cost would be what was debited. So I've got a debit of 305 for the actual, a credit of 300K for the actual or for the applied, or for the estimated or applied. So a 305 debit minus a 300K credit. I've got more in debits. So I expect to see 305 minus 300, a 5K debit balance. So I've got a $5,000 debit balance. I want to get rid of it by crediting. If I have to credit, that means I need a debit to cost of goods sold. So debit and credit overhead. So got this credit to overhead of 5,000. So when I close, 5,000 debit minus 5,000 credit zeroes out. So if I had actual overhead costs, if I debited 298 instead, we're assuming I still applied 300. That's from the initial problem info. And now I'm debiting 298. So I've got 300 in credits minus 298 in debits. I'm going to have more in credits. 300 minus 298, 2,000 more in credits. So if I've got a 2,000 credit, I need to do the opposite to get rid of. I need to debit overhead for 2,000 and then balance with cost of goods sold. I've got a debit, so I need a credit to cost of goods sold. So I'm debiting overhead, crediting cost of goods sold, $2,000. So this journal entry has a debit to overhead of 2,000, 2,000 debit, 2,000 credit, zeros out. So, example. Cost flows associated with the jobs move from work in process, then to finished goods, then to cost of goods sold. So job B15 and B16 are finished in the period, and we want to record their outflow. So the amount that would have left from those jobs would have been the 2,400 plus the 6,000. That's 8,400. So it's going from work in process. Work in process is going down. So credit that asset to decrease it. Finished goods is going up. So I need to debit it to increase it. So debit finished goods, credit work in process, 8,400. Then B15 is sold. That's 2,400. So I'm wanting to record the inventory effect of that sale. So if I sell it, I no longer have it in finished goods, which is an asset, so I need to credit it. And then I want to recognize it as an expense via cost of goods sold, which I would debit. And the amount for B15 that I should record is the $2,400 assigned to it. Okay, so summary of these cost flows. This could be a helpful little study tool or study summary. Remember that applied or estimated overhead is what gets added to work in process, so I debit work in process for that. Actual overhead, I'm debiting the actual overhead account. Also remember that period costs do not go into inventory accounts, so any SG&A should not ever be recorded in inventory. And if something does not go into inventory, it should not be going into cost of goods sold either. Okay, so that's a helpful summary. You might look back at it to help you remember the flows. We're going to stop there with video 3 at the bottom of page 12, and we'll pick back up with the final video, video 4, at the top of page 13 in the chapter 15 notes.